This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose on Wednesday after 2 straight days of losses, as the deadlock in Gaza ceasefire talks renewed uncertainty about the security of supplies from the Middle East, offsetting a bigger-than-expected build in U.S. crude inventories. Brent crude futures were up 25 cents at $89.67 per barrel at 0650 GMT, while U.S. West Texas Intermediate crude futures rose 24 cents to $85.47. Prices for both benchmarks remained down around 1.7% on the end of last week despite geopolitical tensions in the Middle East triggered by the prospect of Israel's war in Gaza lasting longer and drawing in more countries.
U.S. crude oil output is set to grow slightly more than earlier estimates for this year and next, the U.S. Energy Information Administration said on Tuesday, while also hiking its global and domestic oil price forecasts. U.S. crude production will rise by around 280,000 barrels per day, BPD, this year to 13.21 million barrels of oil per day, and by 510,000 barrels of oil per day to 13.72 million barrels of oil per day in 2025, the IEA forecast. It had previously estimated output to rise by 260,000 barrels of oil per day this year and by 460,000 barrels of oil per day next year. The agency's view on U.S. consumption was unchanged at a 200,000 barrel of oil per day increase to 20.4 million barrels of oil per day in 2024.
Moving on to the top news in the energy sector.
U.S. natural gas production will decline in 2024 while demand will rise to a record high, the U.S. Energy Information Administration, AIA, said in its April short-term energy outlook on Tuesday. AIA projected dry gas production will ease from a record 103.80 billion cubic feet per day, BCFD, in 2023 to 103.58 BCFD in 2024 as several producers reduced drilling activities after gas prices NGC1 fell to a 3-1/2-year low in February and March. In 2025, AIA projected output would rise to 104.88 BCFD.
The U.S. Energy Information Administration, EIA, on Tuesday revised its April coal exports forecast downward by 33% and lowered its view for May by 20% due to the collapse of the Francis Scott Key Bridge in Baltimore and resulting port closure. The EIA had expected U.S. coal exports to rise by about 1% this year, but now expects a 6% decrease from last year's levels following the bridge collapse. U.S. coal shipments slowed following the closure of the Port of Baltimore, the second-largest coal export channel in the country, after a huge cargo ship crashed into the bridge on March 26. Next, we have the top news in metal markets. Iron ore futures prices rose for a third straight session on Wednesday, aided by expectations that construction activity is picking up in top consumer China, but gains were capped by investor caution over the scale of the demand recovery. The most traded September iron ore contract on China's Dalian Commodity Exchange traded 1.5% higher at 814 yuan, $112.56, a metric ton, as of 0249 GMT, after climbing more than 5% on Tuesday. The benchmark May iron ore on the Singapore Exchange was 0.14% higher at $107.65 a ton, as of 0239 GMT, following an increase of over 3% in the previous session.
London tin prices rose on Wednesday to hit their highest level in more than a year, as stockpiles fell to the lowest in months, while a rally in other base metals also helped market sentiment. Benchmark 3-month tin on the London Metal Exchange rose 1.8% to $31,730 per metric ton by 0649 GMT, hitting the highest since January 2023. The most traded May tin contract on the Shanghai Futures Exchange climbed 5.3% to 250,810 yuan, $34,679.15 a ton. It hit 251,350 yuan earlier in the session, the highest since June 2022.
We will now look at the top news in the agricultural sector.
Chicago wheat edged lower on Wednesday, falling for a third straight session, weighed down by expectations of bumper supplies from the Northern Hemisphere later this year. Soybeans rose for the first time in 3 sessions, while corn also firmed. Wheat crops are looking better in Russia and US, a Singapore-based trader said. With good supply prospects, millers are not rushing to buy wheat, so the demand is a bit weak. The most active wheat contract on the Chicago Board of Trade was down 0.1% at $5.57 minus 1/4 a bushel as of 0315 GMT, after dropping 1.4% on Tuesday. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.